The news day continues here on One News Now Business. I'm Diego Castro. Here are the biggest stories on the economic and corporate fronts. The country's trade deficit narrows to $4.13 billion in August. August's trade deficit is narrower than the $4.2 billion deficit in the previous month, as well as the $6.03 billion deficit in August of the previous year. This is also the narrowest trade gap in 2 months, or since June's $3.94 billion deficit. In the first 8 months of the year, though, the deficit was reduced to $36.31 billion from $41.86 billion in the same period of last year. The country's exports grew by 4.2% year-on-year in August, marking the fastest growth in 9 months at $6.7 billion. Meanwhile, imports saw an annual 13.1% decline to $10.83 billion. Oxford Economics attribute export growth to manufacturing goods like manufacturing goods including electronics and minerals. They added that this signals an improvement in external demand for Philippine products, while they noted that the decline in imports is slowing down and is now close to bottoming out. The inflow of foreign direct investments, or FDIs, declined in the first 7 months of the year. Data from the Bangko Sentral shows that net FDI inflow stood at $4.66 billion from January to July. That's almost 15% lower compared to the $5.47 billion in the same period of last year. The BSP attributed the decline to concerns over slow global growth. Month-on-month, though, FDI net inflows climbed to 35.7% to $753 million in July. That's the highest in 3 months or since $877 million in April. China Bank economist Dominic Velasquez says the month-on-month increase was likely due to positive risk sentiment. Velasquez says this encouraged the investments in emerging markets like the Philippines. The local stock market made a recovery yesterday as investors continue to assess the impact of the Israel-Hamas conflict. The Philippine Stock Exchange Index climbed by 11.91 points or 0.19%, closing at 6,264.07 on October 10. Sectoral market performance was mixed, with mining and oil, property, financials, and services seeing gains, while holding firms and industrial sectors closed in the red. The total value turnover reached 4.5 billion pesos, with a positive market breadth of 96 to 77, while 50 issues remained unchanged. Asian shares rose following positive news about interest rates on Wall Street. U.S. futures, meanwhile, declined and oil prices retreated slightly after a surge on Monday due to Israel's conflict with Hamas. We'll be back with more stories after the break. Keep it here on One News. You're still watching One News Now. I'm Diego Castro. The Agriculture Department is considering price controls for pork. The DA says it may impose a price cap on pork if the price difference between retail and Farmgate levels continue to widen. The agency also says it may impose price controls if any market manipulation is found. The DA adds that it is also considering to import pork products in the last quarter as they project a decline in the supply of domestic pork. The agency is seeing a deficit equivalent to 10 days of demand at the height of the holiday season. However, importers say this would not do much to help. They say if the government only places its order now, the imports will not arrive in time for the holidays. The Samahang Industriya ng Agrikultura also insists that importation is not the solution and that the government should focus on addressing the wide retail farmgate price difference.
Sabihin, mababa ang farmgate, hindi namimili ang mga biyahero, hindi namimili traders because may malaking volume na nasa market. Kasi kung may shortage siya, kung may kakulangan, we would expect na mataas ang farmgate price. Mali na naman yung sinisilip ng DA, yung gap between farmgate and retail. Yun talaga yung dapat nire-resolve.
Here to give us their insights on the Agriculture Department's pork importation plan, we have with us on the show Jess Cham. He's the president of Emeritus of the Meat Importers and Traders Association. Good morning, sir. Thank you very much for joining us.
Good morning. Happy to be here.
Okay, sir, let's get right to it. You said this move will not do much to alleviate the situation. Now, can you please elaborate on that?
Well, since the pandemic, the supply chain has been severely impacted and is now just trying to get back to normal. But the new normal shows that it will take at least 2 months for products to arrive. So even if we order it now, then we have a shipment in a couple of weeks. It's already November, and it's going to arrive end of December or middle of December. Then importers don't want that because they get stuck in customs due to the long holidays, and we will just incur a lot of port charges. So at this time, importers, when they make their planning, it will be for arrival in January. But then January has its own uncertainties, particularly on the reversion of the import duty on pork back to 30% from the current 15%. So there are a lot of challenges that are facing us right now.
Okay, sir. How are the prices now for pork for Farmgate and in retail? Are the price spikes inevitable given the supply issues caused by the ASF?
Well, the gap between the Farmgate and the retail has always been problematic because each sector, each link of the chain operates under its own conditions. Now, it's very simplistic to have a simple formula and say 1 + 1 + 2 + 3 equals so much. So you are supposed to get that in retail, but it doesn't work that way. The real world doesn't work that way. For example, in the supermarkets, you have a lot of the supermarkets who have very strong market power, and they can dictate their price and their margins. On the Palenque side, you have a lot of these LGUs, and they impose also high fees on their what we call the meat vendors, the lamesador. So now and then, due to the weak purchasing power of the consumers, so the volumes sales of the lamesador is decreased, but they still have to make their daily income. So the only alternative is to raise their margins. So it's not that easy. But we don't think that, we think that we should look at market-friendly interventions instead of price control, because price control is, well, firstly, we believe it's illegal to begin with, and it doesn't really work because there are ways to get around it.
Sinag said wala naman daw pork deficit as there are enough supplies in cold storages. Is this true?
Well, the let's put it this way. Consumption is dynamic. Consumption is elastic. If the price goes down to an affordable level, then there will be more consumption. If like a few years ago, before the pandemic, when the economy was improving, that there was more and more meat consumption because it was more affordable. They had more purchasing power. Now with the pandemic and trying to recover from the pandemic, a lot of the consumers have lost purchasing power. So last 2 weeks ago, we saw the news that said that the survey said half of the population had reduced their food intake. So this is a very glaring example of the situation. Now, there is sufficient. Let's put it this way: there is sufficient imported pork. Now, as regards to the local pork, we are not really very sure because we don't know when a new outbreak of ASF will occur, like the one that just happened in Mindoro. So this was just yesterday or 2 days ago. They had this outbreak in Mindoro. So you don't know when it's going to flare up, and whenever it flares up, then there will be market disruption. So what happens when it flares up? Then the producers in that locality will dump their hogs. They will slaughter. They will cull. They will sell it as quickly as possible. They are afraid that the other live pigs will be infected. So this disrupts the market, and then the prices go down. But this is a blip. But in the meantime, on the retail side, the supermarket, it takes them a while before this product would reach them. And then the retailers, they also understand that this is a blip. It's a one-off phenomenon. So after they cull everything, prices will go back to what it was before. And prices may even go up further because now you have decreased the supply from this locality.
Okay, and with the impending, with the price cap for pork, would this contribute to making the situation worse?
Well, with a price cap, well, as I said, there should be better. The intervention should be market friendly, and there are ways to intervene in the supply chain and in the value chain as well. There are now a lot of the producers have already established their own meat shops. Importers have established their own meat shops. What the government actually should do is they should now change their conversation, because previously all the conversation was that imported pork, frozen pork, was unhealthy, unhygienic, etc., etc. They should change this conversation now, because around the world, everybody agrees that keeping the meat cold is healthy and more hygienic. Otherwise, why would we have so many refrigerators at home? So the government should now move away from the narrative of the producers that imported frozen stuff is unhealthy. Now they should encourage people and say, well, imported frozen pork is not as bad, it's as healthy, as hygienic as a local pork, if not better, but they will not admit it, of course. But in this way, you encourage the consumers to patronize imported pork or refrigerated pork, and at the same time, you incentivize the local producers to start investing in the cold chain, because that is what is lacking in the local production side. There is no cold chain. All the meat is warm and hot carcasses. I won't say hot meat, but hot carcasses. And these carcasses will deteriorate more quickly. The quality will deteriorate more quickly. So it is a good opportunity to start getting them to invest and to look at the cold chain.
Thank you very much for your insights. Unfortunately, that's all the time we have for now. But thank you very much for joining us this morning. Jess Cham, President Emeritus of the Meat Importers and Traders Association. Good morning.
Good morning. Thank you very much.
And those are the top business stories of the hour. I'm Diego Castro. Join us again at 2 p.m. We are One News, all sides, all the time.